John, good to see you. Today we are talking about the concentration risk lurking in your portfolio. A lot of investors have large positions in S&P 500 index funds or in mutual funds that use the S&P as a benchmark. And stocks are up quite a bit this year, which is good news for your portfolio, but I think a lot of investors don't realize that 80% of those gains that we've seen this year are due to only 10 stocks. What's going on here?
Yeah, and Aaron, this isn't a new thing. This has happened quite often over the last 4 or 5 years, really, that we're seeing the Big Ten, as they're called, Meta, Amazon, Google, and so forth, really carrying the S&P 500. And you mentioned earlier that a lot of investors, whether they have these actual investments, these stocks, or they have the ETFs or mutual funds with these large cap growth, people feel comfortable with the S&P 500. America's always been a financial powerhouse. And the problem that a lot of people are getting themselves into is they are heavily concentrated in S&P 500 indexes or companies. And if these 10 companies were to struggle and decline, then the S&P 500 is going to fall with it. And we saw a lot of that in 2022. Some of those big tech stocks took major hits.
Yeah, no, you're right. So just to put this in perspective, we haven't seen this kind of concentration risk in 50 years, since 1973. So what risk does this present?
Well, it's over concentration and lack of diversification. And it's something that I preach to everyone that comes to my office, my clients especially. You must be diversified. And this is a staunch academic principle. When I took my advanced investments course through the private wealth advisory program at Yale University, the number one thing they tell you is you must use proper diversification. And unfortunately, for a lot of people, that just means stocks and bonds. And we obviously know what that happened, the 60-40 portfolios in 2022. It goes way beyond that, folks. You need to have, not only stocks and bonds, you have to have different caps, you have to have international, you have to have low volatility, you have to be broadly diversified. So if those Big Ten did collapse, you're not going to collapse as hard with them. And lastly, you need to, especially in today's day and age, you need to look into some alternative investments.
Right, and we're going to get into those in a second because I know you have tips to manage any potential volatility, and you've touched on it already. But first, you just need to reduce concentration.
Absolutely, you cannot have too much concentration in one fund, one ETF, one mutual fund, one stock.
And so now let's talk through some of those alternatives. And the first would be hedged equities or buffered ETFs.
Yeah, and these have worked very well for us since 2022, when we started seeing a lot of the bond risk and we moved our clients out of heavier bond holdings. And some of these buffered ETFs give our clients access to a participating upside in the S&P 500, but the ETF itself is designed to reduce some of that risk exposure. In the event those Big Ten do drop, we're reducing the exposure on the downside. The other thing,
sorry, go ahead.
And the other thing that we have also done is structured our flash notes. And these investments are negotiated with some of the largest banks in the world. And again, they have a focus on downside risk reduction. And some of these notes do offer principal protection when it comes to market risk, which is really huge in the last couple of years of volatility that we've seen. It's really provided our clients with less stress in volatile times, which is always important.
Right. So glad we get to talk this through, do like a little peek under the hood to understand what's going on here, John. It's been helpful. If somebody has questions to find out whether they are properly diversified, what's the best way to reach you?
Yeah, well, you can always visit our website, www.gosecurus.com. We have a wealth of information there, podcasts, videos. And while you're on the website, you can visit the Contact Us tab. And from there, you can schedule a 15-minute phone call where we'll answer any questions, or a complimentary 1-hour vision and clarity consultation. And if you like doing things the old-fashioned way, you can give us a call at the office, 858-935-6210. Ask to speak with Emily, and she will get you on our schedule.
All right. John, thank you.
Thank you, Erin.